All right. Hello, hello, hello. All right, trying to check the microphone here, and the microphone didn't seem like it was working on me there. Kind of funky. All right, so a little bit of a crisis. It's always one of those things. It's like the morning goes well, and then all of a sudden it's like, everything goes crazy right beforehand. The girl woke up and realized that her play was out of power. My wife's like, "Oh, just grab my tablet." And I go to turn the tablet on. It has like 1% of power. I'm like, "Oh, wah wah wah." And then I got the girl some fruit, put it in a little container. I was like, "Oh, we'll eat upstairs." And she decided to open it up, and there was grapes and blueberries everywhere. So yeah, it's that type of morning, guys. Anyway, we started off the morning as well. It wasn't just me that had some issues. It looks like we have some red retail sales numbers coming in here. And it wasn't just like a little miss. It was actually a pretty decent sized miss on retail sales. And that's going to most likely kind of throw the markets into a little bit of a tizzy today. But it is an FOMC day, and it is an FOMC economic projections day. So with that being said, any other day, red retail sales numbers like this, it would be bad. But again, because most eyes are going to be focused on the economic projections today, that's going to be kind of what the main focus is. So right now in the last 24 hours, and again, for those of you that attended the special session on gold and oil yesterday, really appreciate you guys coming out. Like I said, different type of a presentation for me. Normally I prefer the analysis type stuff versus the kind of larger scale type of abstract. But it's kind of why I've been kind of bearish gold and oil for the last kind of month and a half. So some very interesting reports out there. And again, the most interesting thing about it is just that was built like a month and a half ago at this point, maybe a little over a month, right? When things were like surging forward and had kind of that bearish mindset in it since that time. And look what it's done since that time. And we don't even know how much worse it's going to get. So fun stuff to do. Anyway, going in today, it looks like we have a little bit of, and it's funny, it's really European weakness more than it is dollar strength, I would say at this point. Obviously, the dollar should be weak, and you're seeing that euro dollar is down about 22. Pound dollar is up 84. And again, that goes into what we saw, the counterbalance from last week. Kind of same story that we saw on Monday. Dollar yen down 48, not surprised on that one at all. Dollar Swiss is kind of even at 5. Dollar CAD up about 32. Like I said, there should be more of a reaction from retail sales on that one, but I think the FOMC is what's really just drawing everybody in at this point. It's going to, that's a big report. Aussie dollar down 10, really nothing in 24 hours. Euro pound down 78. Again, that is that pound strength coming back in. And this is how you know that it's more kind of European weakness, that the fact that the euro pound is down 78 and then the pound dollar is only up 86, right? And the euro dollar is down, 21, and then pound yen is up only 30, right? So it's not like it's surging, right? It's a little bit of the pound, a little bit of the euro, and again, you can see it kind of culminating inside of the euro pound there, down 77. So again, that's what we talked about, retracing the major moves of last week, kind of getting it back on track. Looking today, you can see that the pound data this morning was actually good. The CPI year over year, and again, it's year over year, so it's not as big of an impact as I say a month over month or quarter over quarter. Year over year, it's actually +2, right? It was actually better than what it was forecast, even with everything going on. That's pretty nice, right? Coffee. So again, pretty happy with that one. Crude oil inventories today at 10:30. Now it's projected to be, the forecast right now is a positive 2.1. Okay, so the market is kind of preparing for that. Now, oil did have a bit of a rally up yesterday. There was I think it was a 4-hour trade setup. I think I looked at. I think it was a ding on a 4-hour. I'll have to check it again on the charts. I found it on one of them. But again, expected to be a bit of a surplus today, so that could give us some interesting play if we miss, right? We'll see. I really like the info, but your mic was hard to listen to. My ears hurt. The mic was weird to listen to? What do you mean the mic was weird to listen to? I know yesterday they said it was going in and out, and I'm not exactly sure why. I know at one point I did have the microphone too far away. But yeah, so some crazy... No, Kat, you can't sit up here too. Yeah, so again, crude oil is definitely giving us those setups. I think today we'll probably have another bit of a setup this morning. And then it'll be kind of flat until these FOMC statements. All All right. Besides that GDP number for New Zealand, this should be good. This is a quarter-over-quarter number, and you can see it's expected to be 12.5 down. This should definitely give us some setups in the New Zealand dollar, New Zealand yen, particularly with New Zealand yen. I think that'll be probably the best setup, but New Zealand dollar won't be bad as well. And then tonight we have basically the unemployment numbers for Australia. So I do think the Australian numbers tonight will be good. Interesting enough, we're supposed to get monetary policy statements out of Japan today. I think we'll get that at some point. I don't know what time. Typically, that's much later. That may actually help an Australian yen trade tonight if it is within close proximity to that Australian data. But again, that should be interesting. So today is really, I think today is my favorite day as far as trading goes. I do think we will have a lull in the kind of in the middle of the day, but I think tonight will be good between New Zealand and the Aussie figures tonight. I think we're in for it. Looking down. Seeing what's best, or what the latest news is. Obviously, in here, there's nothing too crazy. I love this. We're continuing to monitor information carefully. Whatever. Crunch time. Let's see. The Fed could still move markets on Wednesday, even with rates as a hold. Yeah, it's not the holding rates that'll move it. It's the economic projections, seeing what they say about when they could potentially raise interest rates and what if we're going to go into a recession or whatever after that. They prepare for the monumental shift in FOMC monetary policy. We'll see. Fed's new approach. It's all about the Fed. You get everything in here. Look. Little U.S. data because it just came out. Here's Fed, here's Fed, here's Fed. And then we have this one. We're continuing to monitor this carefully. And the exchange rates. That's really nothing. So yeah, everything's FOMC, guys. FOMC. Not much more, to talk about than that. Now, going into tomorrow, again, we still have that BOJ information. Tomorrow morning before we meet. And again, tomorrow will be 9 to 10 as well. And actually, I'll say 9 to 10 just to stay consistent with it. The boys are back at their moms now for the next couple of days, so I'm getting a break of virtual schooling. But you can see we have pound data early, and it's their monetary policy. Rates not expected to change, but it's kind of the same thing. What are their projections going forward, particularly with Brexit? Now that we've passed through the first hurdle, they had a bill yesterday. If you guys didn't see it, that did pass. It did get through. Obviously, there was some opposition, but that's kind of like, oh, you got enough? Okay, we're going to pose just in case, But again, they got more than enough to go through. And then tomorrow at 8:30, we have the CAD number, which I think is going to be a pretty nice figure for CAD. Obviously we don't have a forecast on that one, the ADP non-farm employment change, but I think that should be pretty fun. And then the unemployment claims number as well. So the unemployment claims number, I think this one could actually be a surprise. I know numerous people at this point that last week was their first week off because of virtual schooling, because they have 2 kids. They can't leave the kids home alone and had to kind of take a step back from work. I'm curious to see, and I know it shows that it's supposed to be down this week, just by a little bit, right? 825. But remember, there's a little bit of a delay in this. And this would bring us back to basically school starting the week after, Labor Day. So I'm kind of surprised that it is a lower one versus a higher, because I know I have 3 parents on the lacrosse team that have had to basically go home. They're like, yeah, we're temporarily unemployed because of again homeschooling. So so that'll be interesting. I think this has the potential for a miss, but right now with the retail sales numbers that we had today, again, I do think that the markets could sway negative this morning, waiting for FOMC. If we get much movement, like I said, I think everything will be focused. But after from 2:00 on, and even this 2:30 with the FOMC press conference, I think it'll be off to the races. I know a lot of you guys love those end of the day rally or collapses. I think today is a day that you would definitely get that. Because remember, all the stagnation, like all the movement this morning that's not going to happen because we're waiting for this, they got to make up for it at some point. So again, it'll be in probably the closing hours today after FOMC is out. All right. So definitely some cool stuff today to trade. All right. So with that said, let's go over and just jump right into charts. So Aussie dollar. We had a great setup yesterday. So here's where we're sitting right now. Let me reset the time. Did it not work? There we go. I was like, why is it not working? So 9 there. We were sitting back right here yesterday. Okay. And we mentioned we were going into this zone up here at 73.33. Actually, we didn't meet yesterday, but this is, we set this zone 2 days ago. This is this time yesterday morning. Gave us a great little Aussie short in here. And again, Didn't make it to us 1 to 5. Again, it could have came just a little bit lower, but 1 to 3 just blew it out of the door, blew it out of the water. You actually had 2 separate entries in here, one here, and then this one that kind of didn't leave the area. We've actually just hit the area again, but I would be a bit more cautious with this. Reason why is because, again, we had the level form. Here's 1 touch. Here's 2 touches. And again, if you consider this 3, this could potentially be 4. So again, we are trying to pushing a little bit long. Really, the trend was yesterday morning for this one to the downside, right? And again, that was a level of Monday that we pointed out. Like I said, with the bad U.S. data right now, I think we're holding this one. I'm actually interested to see if we can punch through the top of this one. You can see on a 4-hour basis, we've got some room to run to the top side. There's a few small levels in here, but it's not like we're all the way back up top again. I'm wondering if the FOMC can, if they're really, really weak in what they say. Again, I wouldn't be surprised if it's a surprise and if they give definitely something the market was not expecting. Could we pop up in a candle or two up to that 73.84? I think so. In which case, that would also lead us into the ability to take this one short due to FOMC. But right now, again, there's this is hit number 4. Not necessarily as interested in it. I think it will base around at this point. Here was your trade from yesterday back to the downside. And again, what will look like up top, probably, let's see, let me overlay this one real quick. Overlay kind of kicks in this area right here. It's quite a mover there. So let's see, let me go back. Let's see if we can refine this a little bit. All right, so there is a zone here. So ideally, the best hit would be the one that's sitting here at 73.99. But I will say that there is kind of a level here that has been tested. Actually, the bottom of this red candle, you can see that this is where the touch is. Sitting right... You know what? I don't even need this one. Let's take this off. I'm going to have to do it this way. We'll have to put 2 on top of each other. I'm going to drop this one. Can I just delete this? Yeah, delete. There we go. Perfect. Let's change this across to... The obnoxious, where is it? Right there. I knew it was in there. So that's where I think the kind of refined level. So here's your 2 entries. So here's your up top, again, with a big spike through. And that looks like something along those lines, right? Let's remove this guy right now. We'll delete that. So here's one. I want to draw this out so everybody can see this one pretty easy here. Okay. Here is the conservative entry, right? Using 73, basically 74, right? So there's your conservative entry. And I'll leave this box here, okay? Here is your a bit more aggressive entry right here. And that one would look like something along these lines here. Okay, so again, it's just which one you're getting into, just minor differences. I wouldn't say that, I wouldn't say that it's earth-shatteringly different. It's just, again, getting in a little bit early versus a little bit late is the only kind of difference between the two. Oh, hold on one sec, guys. I have to plug this in. So I have a Logitech mouse that I love. It's got a great grip on it. It's a wireless, but man, the battery lasts like 2 hours now. And I refuse to buy a new battery for, because it's a little bit, it's like a generation or two back. And it's like, I start losing the cursor and I'm like, wait, what happened? I'm like, oh God, wait, the mouse is out. So these are the 2 entries. There's your first entry. Your second entry is approximately, over here, 73.81. I think either of those 2 is good if we get an FOMC pop into those range. Okay. Aussie yen. And again, these will also be valid for tonight. So if the FOMC notes just brings us slowly higher and we don't get a spike, if we can get into either of these 2 tonight for the Aussie unemployment data, right? Those could also be great areas to take a short off of. And again, for those of you that understand the limited risk of, of options, you could always probably take these in Nadex as well if we get something up in here. And again, we need to pop up, right? We got to move higher. Right now, we got to break through this zone over here. Again, it's great trade setup from yesterday, but it's got to move a bit. Aussie yen. All right, so Aussie yen, we're sitting right here. Okay, let's see. Yesterday morning we were here, right? And again, this is the same trade setup. That's 77.49. And then Monday, we were sitting right here, okay? And what did we mention? 77.50 was where our entry was. You guys can see, boom, boom, and we're back down to the slower side. Right now, I would say that all targets, and again, with price being right here right now at 76.87, I'm sorry, 76.78, I think levels to look out for would probably be I'm probably going to push this a bit higher. So let's see. Let's bring this straight across for tonight. And I'm going to move this over. Again, nice reaction off of it. We had this kind of double top in here off that level. But this is kind of where I'm bracketing this one off right now. Again, between FOMC controlling the yen and moving that top or bottom, as well as the Aussie news tonight, I think either of those two are good for a short or a long. 77.61 or 76.33. Reason why is this area here, again, front run touch, kind of a deep touch. And again, that's my one concern about it. I'm probably going to wait. It's not going to be like a, just stop touching that cord. It's not going to be kind of an instant pop and down. I don't think it'll be something like this. If it is, you would take it off the backside. Don't do just like the first touch. If it goes in and kind of bases through, and again, you can drop it down, get for something, a little bit more basing in here. I think would be a better way to take it, but definitely not opposed to taking this as a confirmation. So, even if it's even if it's one of these things where it pulls back up again, even this, I wouldn't be opposed to it, right? And then same thing, same pattern down here, right? A pull away, pull back, and then a catapult off. I think, this same pattern here. Either one of those two works for this Aussie position. All right. Oh, hold on. The baby is, I'd use a different port. I'm also testing a new keyboard right now. Not testing, but like it's a new keyboard that I'm trying out to see if I like it or not. I don't know if you guys remember back like a month, 2 months ago, I was talking about how you can fall down the slippery dark, I'm going to call it dark too because they're expensive. The dark slope of mechanical keyboards, like custom keyboards. I wanted to get kind of an entry starter level one to see if I like the keys and how it's different. So I got one. It was, this was a cheaper one. It is hot swappable, so I can pull all the switches out and everything in there. Because I have an older one that's like 6 years old and it's starting to go. It still types pretty well. It's an old Logitech as well. And this one is like and I want to learn about, there's linear switches and tactile switches and clicky switches. And I didn't think I, like the loud switches. And I've been testing it for 2 days now, but I'm using the mouse port. So she's pulling, the baby is pulling the wire and the mouse is going across the desk. I heard a lot of things about binary options. Why don't with them? But that's a great question. So I'll go ahead and answer this one right now before I jump on because this is a great example with it. So yeah, there's a ton of bad information out there about binary options. And the reason why is because originally when they came out, they weren't regulated in the United States. When things are not regulated in the United States, that's where you hear about like Cayman Island companies, and there was a lot of like offshore companies that offered binary options. The problem was they were offshore. There was no regulation. So you could send them money, make a ton of money, and they could just decide to keep it, and there was absolutely no recourse. And they would rip people off left and right. Hence where we got the bad, everybody has the bad opinion of binary options. All of a sudden, there's a company, obviously IG, if you don't know who IG is. They're a large European brokerage firm for currencies and, all different types of other things. Actually, they weren't the first ones, I guess, but they're the ones who own it now. I forget who it was originally, but Nadex is basically a U.S. regulated, CFTC regulated binary options exchange. So it's not a broker, right? It's an actual exchange where they're done. There are actually 2 exchanges in the United States that are regulated by the government, right? Again, the regulation is what makes them legit. Again, they have a lot of reporting, things they can and can't do. The reason why I like them is it's the same reason why I like options. Options in general give you limited risk entries where they can never go against you more than what you got into the trade. Binary options are no different, okay? I do a lot of stuff for Nadex. I like them, again, not so much the binary aspect of it, the $0 or $100, like you're wrong or you're right. But again, it's an option. I know when I get into a position, the most I can possibly lose, no matter what happens, is whatever I got into the position for, okay? Taking advantage of areas like this, if I was going to trade, say, I don't know, non-farm payroll, right, in currencies, I could, or it doesn't matter what it is. I mean, say earnings for, non-farm is kind of like the biggest news event, but say that this was something like Apple or Tesla, and they were about to have earnings, right? When you look at the range from here to here, right, where your stop loss is, you could have a whip up to here and a whip all the way down to here just in anticipation for what was going to happen, right? As well as the bid-ask spread will also increase, all right? Well, if I only risked, if I was looking for this to happen here, right? Like say I was looking for a move to happen like this, right? And it's news time right here, and I want to take advantage of the news. Like I don't want the news to come out and go all the way down here, and I miss my trade. So I could put a limited risk position on here for say like $15 worth of risk, right? I could be wrong. It could go all the way up to here. I've only lost $15. It could whipsaw up to here. I only lost $15, right? It could whip up and then go all the way down to here, and bam, I make my money because I'm protected for options, just like a call or a put, right? If I bought a call in Apple and priced it the next week goes straight down, I still own that call, and I've lost some money in the call, right? In traditional options, only, and again, there's still going to be time premium and things in there as well too, but I've lost some money in that call, but I still own the call. I still have the right. If the week after, I mean, yeah, it sucked for a week. I was in the red a little bit, but I can't lose any more than what it cost me to buy those calls, right? There's no margin calls. And then the next week, if it skyrockets up again, I can still take profit. It's the option aspect that I like about it the most. So that's why I use them. Binary still have to have an exit plan. Yeah, you still have to. Yep, absolutely. So yeah, so it's one of those things, Bio. Yes, people hear them. They're like, oh my God. I mean, people think the same of currencies, and that's because Americans are ignorant. That's it. Oh, forex. There's nothing. Well, the whole world does forex, right? It's the most traded. It's the biggest market in the world. It's the most traded market in the world. So anybody that tells you, "Oh, forex is crap," they have no idea what they're talking about. It just shows that they are ignorant in kind of global, in the global economy. It dwarfs the U.S. stock market. It dwarfs the futures market. Like, it's ridiculous how much more, right? A couple years ago, I forget how many it was. I forget what the statistics were, but there was more currency trading in one day than the U.S. stock market had, like the Nasdaq had in the entire year, in one day. Okay, so again, it's big, right? The rest of the world laughs. They're like, who cares about stocks? So what? And it's funny, overseas, they don't care about it at all. It doesn't matter because, again, for overseas, they're much more globally focused. But yeah, I would never do binaries with a foreign exchange or with a foreign binary company. I would only do it with a regulated, licensed company. All right. Forex OP for sure. I'm just not into it. Yeah, they're all different. I follow the basket, just don't trade. Yeah. And they're all the same. I mean, again, a chart is a chart is a chart. I say it all the time to my students as well. Again, the way that I look at this chart is no different than I would look at anything else. Gold, oil, silver. I mean, if believe it or not, it actually works in the cryptos as well. If you're into that, I'm not. I prefer real things, not monopoly money, but it does work over there as well. It's just how buyers and sellers work. It works in real estate. It works in it works in stamps. I mean, baseball cards. It works in everything. It's just all it is analyzing how buyers and sellers work. Right? There's a reason why things turn here. I mean, you can do it with groceries if you want. But that's what I'm looking for either way here, guys. Euro yen. All right. So here was the Harry Potter. We just didn't get the pullback. So we were waiting for a break of the zone at 125.26. We got the break. It went down to its target 1. It went down to its target 2 and went all the way to the opposing zone like we were looking for. Yeah, it just left without us. So again, we called the break, guys. And again, you had to take this in an aggressive stance. The pullback we got was much, much lower. And look at this. It went all the way down and is now bouncing off the lower demand zone. So, wah, wah, wah. We tried to go conservative, and it left without us. So that's what happens. Good thing about this one is we are at the other end of the curve now. We are on the lower side. We are hitting a demand zone right now. And again, this area was kind of a larger area. 4-hour wise, you guys can see this is a pretty big zone, right? We've had some of this over here. We've had a bounce off of it. We got front run. We got front run again. And now we're finally hitting it. With as much kind of movement over the last day that we've seen, I do feel that there's probably some type of a buying opportunity in here. Although at this point in time, again, the European Open has already happened. They only got a little bit of time left. I do think that this will probably be more of a yen-based move. We may have to wait a couple hours, though. Again, FOMC will affect the yen because yen is the proxy for the stock exchange, right, for the Dow. Couple things I want to point out on this one, though. Again, price has already basically been front run twice. We're finally hitting it. We have this area here, but as you can see, I mean, this is there's a piece here and this white area. These ascending wicks, I love these, right? These are great areas. And if I extend this across, if I extend these across this kind of entire area here, you can see we're kind of sitting with one level here and then this other level in front of it. So it definitely has some things to chunk through to the downside. So I do feel we should be looking for reversal type trades in here. And again, what this would look like, I'd probably look for, let me take some of these off now. We don't really need this target anymore. We'll delete that. And we can pull this. I'll pull this down. Let's see. That was, we can remove that now. Oops. I didn't want to delete that. Let me take this guy off. There we go. That's what I wanted. So I'm going to move this down now for potential longs. Okay. I'll just move that over there. Let's move this up in here. So basically, we're bouncing off this 124.35. I would look for probably another. I would look for a bounce up and then kind of that failure to go lower here. The one thing that I don't like about this is we have this little area right here, which I think will give us a little bit of an issue. I do see price kind of bouncing off that level. Just by the way that, again, we had this drop, this base sideways and drop again. I do think profit targets, and this is a zone that I would be interested in looking at later. And again, depending on when we hit this area here, I'm going to turn this one white because this is a potential entry, again, depending on time. We've seen a great movement off of it. I mean, we based, we dropped, we based, we dropped, we rallied, grinded really up, touched, and then it got hammered down. Drop, sideways, drop again, right into this level. So this would have been a great trade setup. In all fairness, I did not take this one. This one is... this one clicked in at 4 o'clock in the morning. You guys know that, although I do wake up sometimes early, I was not up at 4 o'clock this morning. Okay. So I was unable to grab this one, but this was a great setup if you guys were able to get it. But I do think as fast as it moved in that time frame, I do think this was an emotional response, particularly after the European Open. I do think we were going to get a bounce off of it. So look for a pop and then punch through, but be cautious of this level here. Okay. Looking at the pound yen. So pound yen. Look at the way this guy is trading sideways. So, can anybody call this a channel? Yes, you could absolutely call this a channel. All right, so we're sitting here. Let's see. It's so weird. These keys are, and I will say, I don't know if anybody has a mechanical keyboard out there. I do. It's weird. If I'm not touching it and I come back and then touch it, I'm like, oh, this is weird because the key placement is slightly different. I would say the keys are slightly closer than the other keyboard. I feel like they are, right? The key shape maybe top is different a little bit, right? And it's clickier, right? It's kind of it's a brown switch, so it's not like a full. I feel like the other one I had was linear, but I will say after using it for like 10 minutes and getting readjusted to it again, because the other one I've been using for like 8 years, I'm like, man, I really do like this keyboard. Although it is loud, there are some things in there that I would change, but it could be because it was a cheaper entry model. Anyway, look at that. Look at the channeling sideways. So we're sitting here at 9. Sorry, I got distracted. But every time I hit the keyboard, I'm like, yeah, I do kind of like this. It is a TKL. I don't know if you guys know what a 10 keyless is. I don't have a Numlock key. That's the only one I'm missing, but I like it because it doesn't have the numer pad on the side. So it's like, man, there's so much room on my desk. It's amazing. Here's where we are now. Here's where we were at this time yesterday for chart school. Yesterday morning, you guys, again, we didn't do it, but you guys should have been taking trades off of here. The day before, we were sitting right here. And what we were talking about, we had this level that's been tested. It actually formed a new level right when we were talking. And that's where this one has been channeling sideways back and forth. So as you guys can see too, we mentioned this area here. This is where the Sunday gap was inside of this yellow area. And you can see we had touch, 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 and touch. And this was a pretty good run between the two, about 70 pips. So this has been the gift that keeps on giving multiple times now in the last 48 hours. At this point, I would say the way that it looks, as much as this has rallied up in the last, 3-4 hours, kind of a similar situation, right? This one obviously will be affected by the yen, but right now when we base, we punch higher, then we push lower. So, in 30 minutes, if this green is not higher and it starts turning red, I mean, it's setting up for a run back down to the bottom side, right? And there's nothing else we can really say about that one. I mean, it's literally just a channel sideways right now between the two levels that are marked off. I would say the bottom side has been touched numerous times at this point. I mean, 1, 2, 3, kind of the fourth hit, although these are getting higher. Once we get a breakthrough, I would be looking for a bounce off 35.05, and I think that's a valid entry for today. This will obviously be affected by FOMC notes at 2. So again, end of the day rally, watch where this one goes, and then probably look for a retrace. This one will have a little bit of a response off the monetary policy statement that the yen is supposed to have. And again, that's supposed to be super late tonight, like 11, midnight Eastern, sometime around there. Again, I don't expect it to be anything earth-shattering that they say. The rates are already, negative and zero and stuff like that. So I don't see too much coming from it, but just be aware that something could happen with that monetary policy statement. But I think either of those two are as good. I think longs off 35.05 are decent. And again, I'd really like to start punching through this top side. Again, be very cautious of this yellow area right below here. Right, we have this pullback, and again, front run, front run, front run. So again, there are definitely sellers sitting in this yellow area. There's no debating it. Right, I don't care what any indicator tells you. Seller stepped in and punched it down. Seller stepped in and punched it down. Seller stepped in and punched it down. So there are sellers here. Okay, they won't stay forever, but after that, we got some room to run to the top side before 138.01. But keep that on your radar. But for right now, this is looking like this is going to be a short this morning, at least down to probably here, and that would be down till duration-wise. I could see this one coming from here to here, from now till about 1 o'clock in the afternoon. And 1 o'clock, I wouldn't be surprised if it was sitting right down here at 1. And biggest question is how much premium are they going to jack into these things? But if we are in this lower level at 130, is that worth taking something for FOMC? Because FOMC will definitely move the Dow, right? That will definitely move the yen. And again, could that give us yen weakness? Because, I don't think FOMC is going to tell us the economy is in a great place. Strong as it's ever been. No, I wouldn't quite say that, especially with retail sales being lower. I could see it being negative, which again could give us some yen negativity, right? Yen negativity, which would do what? It would make this pair go up. So if we can drive that down to this level by 1 o'clock, 1:30, there could be a nice little long here. Okay, and again, taking it off right where it, at the red line as well. Let me put some numbers on there so you guys can kind of see. That area is approaching 35.65, and top side, that area is approximately 36.39. All right. Again, this is kind of like a news-based trade. You guys know I love trading news. Look at the pound. All right, so here is our position. So here's my picture from the other day. I'll go back to the 30 minutes so you guys can say, oh, look. Okay, so we talked about the pull back down and then the punch forward, right? Off this upper level. We ended up not getting it. It went to the profit targets. As you guys can see, we had this one here where we had this pullback down. Oops, I can't grab it. It's this pullback down and then this punch higher, right? Well, here is the one we talked about. Okay, we had our punch down, and again, there's the target. So we ended up going up to it. This one was kind of split between two different time frames. Let me delete some of these just to clean this one up again. We can take this yellow zone off. We don't need that anymore. Let's move this. We're going to move this up top now. We're going to bring this all the way to the extreme here. Let's see. Let me take the overlay off on this one. It's like, why is there extra lines? All right, so that's where we're sitting right now. Let's see. I'm going to clean the bottom of it too. We don't need this now. I don't know if you guys can hear her music or not. She's not singing, thankfully. Let's go off. Let's go to the top one. All right, so now remember, this is a level up top. There's two levels here. I think, is it the hourly? No, must be in the 4 hour. Yeah, it's a 4 hour. So this is a 4 hour level we're banking off of right now. Again, if you guys are looking at this, first thing first, you got to look at it, be like, hey, wait a second. This is a huge drop. This is a racetrack. We've retraced it all the way back up again. We should be getting out of our longs, but is there an opportunity to go short? And look at this candle. Yeah, it's a huge candle on the 4 hour. Okay. Here's what we got on the hourly. Now, it is a zone. I mentioned that, yes, it does have the proper formation, this one. I don't necessarily love it, right? Again, this is quite a large wick. On the 30-minute as well, you guys can see. Let's take this off. It's a very, very hard candle to be able to draw out of. You could potentially use this line. Let me change this to white so we can kind of see it cutting through. You could use that, and that does reduce our risk a little bit. The total zone is about 35 pips, which is a lot on a 30-minute chart. Reducing it down to just that smaller level is only about 25, which is going to require quite a bit of movement. And we're kind of hitting that level right now. The one thing I don't like about it is we hit this level and then base below it to punch through. I don't know. It's a big level. I think, if anything on this one, let's wait for it to go a bit higher. And again, that could be an FOMC piece. Just unfortunately, this one, the risk is a bit much, right? I love the drop. I think the drop is great. Again, we've been playing the long back up to that level. It is in an area where, there are shorts in here. But again, this requires a lot of dollar weakness. I feel like if we're going to take dollar weakness into this one, I feel like we should get to a level just a bit higher. Again, larger time frame type based move here. And again, there's your 4 hour There's your 4 hour right there. Oh, I can't shrink it. I hate the sizing on this sometimes. There, you guys can see it right there. Right, so that's, again, it's set up for a reversal. Again, FOMC lined it up. Pound News has also lined it up. So it is set up for some type of a short. And again, there's one level here. This is a big area. It's got to chunk through. And then there's a little tiny kind of hidden level sitting, not hidden, but, additional layer right there. Okay, sitting on the top side. So we got a bit of backside. I'd really like you to get up to the 130.12 before FOMC. I think that would be a decent opportunity to take this one short. And bring this back to the downside. I think we're due for it. Okay. Euro pound. So there's our Euro pound trade. Euro pound. All right. So this is one of those ones that we need to do a little bit of adjustment on. Okay. Now, we mentioned that I marked this area off on Monday and said, hey, listen, this is way too big of a drive up. We will expect, it was an emotional response. We are looking for a rollover and a turn, and there's a couple places we could have got in, okay? Again, this was drawn here. We had seen this level before. This would have been, let's see, here we're good. Here's yesterday morning at this time. Okay, again, basing in that level, which is like yes, 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 but again, we need to make some adjustments. And then here's where we were the other day. Now, this would have had to move down to here, okay? Because again, during chart school, we said, hey, listen, we're looking for a base here. Yeah, the base occurred. We just have to adjust it because we finished. There is your Harry Potter trade. Oops, there we go. There is your... There we go. And there we go. I'm like hearing her music and I'm like, what? She's singing. She's like bouncing around my lap. There was your Harry Potter trade from this morning. I hope some of you guys got that one. Or girls. Okay. And again, what we were talking for, we were looking for a retrace of this level. Again, a large emotional response like we could get today with FOMC. We're looking for a level of basing. Here was our first one, right? But really didn't get the pullback, so we had to move it down a little bit lower. Look for the basing. Here was our basing. There was our basing. There was our pullback right here. And this one kicked in at about, again, the European Open, right? European Open is a great time to get these things. And nothing but straight down since that time. And actually, we just missed our 1 to 5, but I think we will be able to hit it in a little bit here. We're about 7 pips off from it to the downside. Again, that was a Monday trade setup. Right now, we're kind of sitting in the middle of the range. You could potentially take this, although I'd probably move it a bit higher if you're looking to take another short off of there. I do think 90.91 is a decent level. That's really what kind of the launching point was for this move. Again, if we hit that level and do not break through the bottom and bounce higher, again, look for a failure to go lower, long out of the top side on that one. And that would look approximately like this, right about there. Okay, and again, I'm okay with that. I think that's pretty decent as far as, again, if we base here and then drop down, it's perfect place for a profit target. Perfect place. Setting up good on that one. But again, probably not a today target. That's probably going to be probably tomorrow. Again, I would watch this one. I know I don't do it as often as I used to, again, with the baby and stuff like that. But European Open trades are great times, particularly in cases like this. I mean, little if you woke up for the 3 o'clock entry, you can see, listen, 3 o'clock entry, your risk on this one was small. You were talking about risking 15 pips. Can you take 15 minutes and set this up ahead of time? And we set this up, this would have been set up 2 Mondays ago, or two days ago, right? Could you have woken up at 3 and said, is it in the right level? Yep. Okay, great. Take 15 minutes, put the trade on, go back to bed, and you just woke up and you have 45 pips already, right? So they are hard to take. Again, waking up, it does mess up your sleep schedule a little bit, but that's trading. I mean, waking up with 45 pips in your pocket already is not bad. And in fact, this one is continuing to run all the way down. But again, I'd be looking for bounces and longs off this 90.91. Looking at the euro dollar. So euro dollar, you guys remember I drew this on, I was looking for a hit of the level, a pullback and drop. So here's where we're sitting right now, right? Here's where we were yesterday, right here, right about the same spot. And here's where we were on Monday, right here. And what did I say? I would like to hit this level. I would like to pull off of it. I'd like to pull back. And what do we have right here? Okay. So same thing. There's our hit. There's our pullback. A little bit deeper than what I drew, right? There's our pullback again. And there is your collapse. And again, where did it point to? Almost the exact same spot. So again, that's why we're looking for these confirmation entries into things. All right. So the euro dollar right now, let me delete a lot of these so I can take them off so we can kind of see things. But there was the draw from Monday, guys. Again, I hope that you guys made money off this one. I mean, I drew it. Look, I drew the boom, boom, boom and drop. I mean, I kind of drew it. I messed up a little bit, right? I should have put it here. So I missed it by, let's see. This is 12. That's 13. I missed it by 5 pips. My bad. I missed it by 5 pips on the pullback, but the target was dead on. All right, so right now, again, 4-hour wise, we're still kind of sitting in the middle of the range. We have this top section up top. Let's clean this. We don't need that Harry Potter up there right now. I thought I pulled all these off. I did have this crash the other day, so let's pull these. All right, delete that now. Let's pull this. Let's pull this across. Again, I don't go up to the 4-hour on this one too much. Hold on. I'll have to adjust that one. You know what? I'm going to delete that one right now. All right, so let's bring this back down to an hourly. All right. So we see that we have a level here. I'm actually going to, you know what? I am going to adjust that higher. I'm going to bring this up because I want to get us a decent entry on this one. To here. Again, that's a front run level right there. That's good. I like that. Oh, the mouse is being funky again. I'm going to have to get a new mouse. Every time I buy a computer, my wife's like, did you need to have that? I'm like, yes, I do. I did need to have that. Did you need that mason jar of Go Juice? Yes, I did need that mason jar of Go Juice. I haven't said that to her yet because James has not figured out how to send me the Go Juice yet. But if I ever get it, that's the conversation I'm going to have with my wife. Oh, I know why it's not working. The baby's hitting buttons. All right, so this is where we're sitting right now. We're kind of in the middle of the range on the euro dollar. Kind of a problem. And again, we're bouncing off a level here. None of this is really super clean. This is a wick over wick. It's not really a roll point. So right now, I would say probably going to use some caution. Looking for price to come back down to this 117.67. Again, we're in the middle of the range. Again, minor level here. It's there. I mean, if anything, probably the cleanest thing we have on this is this little kind of this Harry Potter kind of short coming through. Again, we have that racetrack. So this is a racetrack break with a Harry Potter confirmation. Sounds really fancy, doesn't it? A racetrack break with a Harry Potter confirmation. Man, I need to box that up and sell it. No, I'm just kidding. You guys know that Harry Potter I give to everybody. So yeah, I think we'll bounce off this level coming up later. Again, we're just this one's just it's just not close enough to anything decent on this one. Now FOMC will hopefully chop this one up and wipe out all this junk in here, get us back to some clean levels. That's what I'm hoping for. But right now we got nothing really. Like I said, small tested zone here, small front run. So, and we're sitting. Let's see, 20 pips away. I don't know. I mean. I doubt it's moving 20 pips in the next 20 minutes. At 10:30, again, maybe we'll get a 10:30 little bounce off of this piece, but I do think by 11, 12 o'clock, I think this market's going to stabilize and just slow down and again, wait for FOMC. 30, as you guys know, I won't use 30-minute levels for FOMC. I want something that's a little bit bigger, a little bit more power behind it. So just be cautious with that one. Again, if we can get top or bottom, I'm good with it, but I'd be pretty... Even in Nadex, because again, there's going to be a lot of premium jacked into those things. I'd be very cautious with this level, but any other day it would be worth a bounce off there, because of the timing. But right now, probably not the best. Right now, Dollar CAD, you can see Dollar CAD is also doing one of those like let's draw a box and let's stay in it, right? Excuse me. My allergies are still kicking my ass. 132.40 and 131.06 is really kind of my top and bottom. For this one, obviously we're getting channeling sideways. I'll draw these in white boxes here so you guys can see kind of what we're going off of. All it is basically consolidation right now. I mean, we're kind of standing in there. Bottom side has been a little bit kind of funkier, but as you guys can see, there is a piece in there. I don't know, can we see it on the 30-minute? Yeah, you can see it right here on the 30-minute. Oops. Right here. You guys see this drop basing and then punch out of it. Again, test, front run, test, and it's kind of moving down. Opposite side is about 50 pips. So it's been decent for a trade, but again, it's not really the top and bottom for a conservative. This is something that can happen. This is an FOMC play today. If we get a punch top or down, I think we can, again, have a rollover. It's about 50 pips top and about 80 pips down, which FOMC absolutely, it's in its range for kind of a surprise move either way. So keep those marked off, 132.40 and 131.06. Now, dollar Swiss. All right, so we had the long in here. I think this is off the hourly. Yeah, so here's where we had this. Let me see. Did we have a zone from there? Yeah, it was this zone in here. We had this big zone, and what we probably did is refined it down. Yeah, we refined it down a little bit into this area. There was our pop. You guys can see on the hourly. We had our entry here. It was basically here. and profit target was up to this 90 right here. Okay. So you guys can see that one completed. Nothing crazy, just a smaller trade. We talked about touching that yellow level and getting long at the yellow level. So it's fine. Oops, I want to move that. It is what it is. What we can do with it now. I don't need this anymore. We took the bounce. Let's move this over. Whoops. I'm going to move this. Let's see. What zone do I want to use? I'm going to use this one because that's a clean one. We're watching this for upside entries today. Downside. Let me see. Where is that at? Let me draw. Let's go down. Let's put the 4-hour overlay on. Let's pull this back. It's a big zone. Yeah, we're going to have to hold that one. All right. All right, let's bring this guy across. So these are kind of what we're watching for top and bottom here. I don't need this. I can take that off now. All right, so as you guys can see, this is, I'm using 1-hour levels on this one. This is a huge kind of 4-hour level here. The refined level brings it down to about 8 pips. The big one is about 31. Okay, dollar Swiss is not one of the bigger pairs. It's a 58 pip ATR. So, risking on an hourly looking at 30 pips, it's basically half. It's like no, not so much. It's just not a good setup on that one. So I'd really wait till we get back to one of these clean levels. Again, the 91.10 I think is a great level. If we can get a pop into here, look for a rollover. Again, confirmation entry on this one. Don't take it just on a quick up and down. If you miss it, oh well, we miss it. It's not the end of the world. I'd much rather you guys kind of get it on that balance and be safe. And same thing, 90.06, I think is also a level that we need to watch out for. Great movement. Look at this. This is really great basing. And again, it's it's a touch. It came a little bit higher, had some problems, and then bam, it just exploded off. So I do think that's a level we need to watch out for. We haven't really seen much poking back and forth between U.S. and China, but again, this will be a bit of an FOMC play if it is a miss. So look for this one, top or bottom on shorts. Dollar yen. So dollar yen. Here you go, guys. Excuse me, Jinjin. All right, so here's where we are now. Yesterday, we would have been sitting right here at 9:30. The day before, we were sitting on Monday. We were sitting right here. And what did we mention? There's your Harry Potter. Look for the pullback. Boom. Came back up and tagged it yesterday morning at about 5:30 in the morning. And look at the collapse all the way back down. Your 1 to 3 target was at 105.54. It hit our 105 or 1 to 5 target. You can see it's just blowing past that one to the downside. So there was the same thing, right? We were waiting for a break of this level. Break, pull back, and drop. Now, did I expect this thing to drop 90 pips after that? No. So this one is obviously moving a bit more. We got our money out of it. And we were concerned, we were watching this level. There was a bounce here. And you guys can see, look, there is a basing level right in here, right? It actually hit this level and punched at 105.35. So that's where we were worried about our targets. Again, good job, and it continued to push lower. At this point, I don't see much stopping this right now. As you guys can see, this is a huge explosive move on the 4-hour. There's not much stopping this or slowing this down until we get down to here at the 104.53. Now, we have entered the kind of daily zone, which is one thing that is slowing it down a bit. I'll drop it down to an hourly, and you can see the overlay-wise. Let's see. Let me delete some of these things off real quick. Let's pull this off. Delete. I want to keep that on. Nothing else is disappearing. Let's see. That's where price is currently right now. I'm going to use this box and bring this back down to here. Okay, that's where the 4-hour level kicks in. Harry Potter's done, so I can take that off. Whoops. I'll take this off now. Whoops. Let's see. I want to pull this off. Delete. I can pull this off. Delete this off. This level we're going to leave. You know what? I'm going to take that off too, just to clean this up. I'll move this across here. 4-hour wise. Yeah, we want to leave this right here at 106. Let's put that. See what happens when I don't do this for one day with you guys. All right. So that's kind of what we're looking for right now. Look for this to come down to 104.53. There's definitely a bounce off of this thing. Look at the way that this moved. There was definitely some buyers interested in supporting this one. Big question is, what time will we hit it? Again, this is a 4-hour chart. That's what gives us the cleanest look. On the 1 hour, you can see we're kind of looking at this. And again, this is quite a large zone. It is about 31 pips, and we may be able to snag, let me see, do we have a cleaner? Yeah, we could probably clean this up a little bit. There's actually two here, right? So there's this little one right before the level. And again, that may be why we may see a little bounce off of that one. We could probably refine this one and use it from here to here. These two. Let me change the colors of this one so we know. Yeah, there we go. We'll do it off those green. Not that I use this green for much, but there we go. Punch forward over in this level. So let's look for bounces coming off this 104.36. Again, knowing that that's inside of that 4-hour zone, and again, we use the 1 hour to refine it back down again. But look for a bounce off that level. Again, that's not a bad FOMC entry either. It's about 60 pips. So again, that is a definite kind of move there. NQ. All right. So look at the NQ here. So we'll drop it back up. There was that kind of failure position to go in that we mentioned 2 days ago. So we can move it off now just to clean it up. But you guys can see it was a decent short out of there. Let's look. So obviously high on the curve again. It is coming short off of there. No surprise with the retail sales numbers. Had you taken this one from this morning? Actually, I'm hitting all kinds of wrong buttons here. I will say I feel like the keys are smaller. But that's kind of what we're setting up for right now. Buyers have stepped in here just a little bit shy. After that, I think we are good on the 1 to 3 to the downside. And again, that's just bringing things basically grinding through, coming back high on the curve, and taking a short off of it. So again, bearish position right now. I'm trying to see if there's anything great in this one. I mean, obviously the 108 down here, this level. Again, that's probably on the hourly. No, it was actually lower than that. Yeah, there it is. There it is. Yes, Jinjin. Jinjin does not like this chart. She's like, no. Down here, this. So right now, yeah, I mean, like I said, short retail sales numbers, not surprised. Media will take this one and spin. We are approaching a reversal time, and again, there are some buyers stepping into this area, so just be cautious as any of your shorts. But again, you guys should be short this one already. Not too bad a movement, right? We're talking about what? About 100 points down on that one. So again, some nice movement in that to the downside. Okay. Really, I don't really love any of the levels here. So like I said, I think this one is if we can get some decent basing, that'll give us a pullback level for FOMC. I don't know. Things that I expect FOMC to say in regards to the indices is them just talking about stabilizing the economy, doing everything that they can to stabilize the economy. The only thing that can really, really screw this up is them talking about, watching inflation closely and managing inflation. But at this point, I feel like the low interest rate is going to be something that we see for quite a long time now. I think the last projection that I saw somebody post was it would be 2022 before we really kind of looked into raising interest rates. At next year, we would still run at this hot level, which would be good for the NQ. So, like I said, if you're short this position, definitely get out of this thing before FOMC kicks in. Again, we may get a reversal at about 10:30. There's some minor buyers in here, but do not be, if you are short this, get out of it before FOMC. Okay. I think if anything, this one stands to bounce and go higher, but we need really a basing level before we can get there on FOMC. Okay. Unfortunately, there's not really the best of clean levels to kind of grab. This one's okay here in the middle, but it's not this. Down here would be a much better place to get in. So it's probably not going to be the easiest. S&P. So S&P on the 15-minute, let's bring this up a little bit higher, kind of get a look here. This one failed to push any higher up into this 3440. So we have this level here that's been this white zone, this area of interest level. And again, it was the top here, balance came through, was the bottom, based again, top, again, base through, was the bottom again. So it's quite a bit of a move down. Not that it can't do it, but if we remain negative until the FOMC notice, there is a long position out of here. There is a position sitting kind of in this range, right? If we can get down there. Like I said, I'm trying to figure out what they could say today at FOMC that would really send this market down. Only talking about how bad the economy is and the economic projections, but understand them saying that the economy is bad, but then following it up with, but we will do everything in our power to stimulate this economy, which basically means we're going to keep interest rates low and support companies so they don't fail, is only positive for the stock market. So I'd like to get it long this one. I think 33.77 is a great area. But unfortunately, besides that, we really don't have much in here. You could. Let's see. Do we have a pop here? There is a potential pop back up to that zone on the 15-minute. Although, again, I don't know how. I hate to go down to a 15-minute for FOMC because it's too big of a release. I like the candle formation. I think this candle formation is great, but I'm just afraid taking a 15-minute with FOMC economic projections to the top side. Kind of rooting for this one to just collapse. I'd like to be in this 33.77, and I think there's a long out of there. We are a couple hours away, so I think the best way to play this one is really drop down to the 30-minute, 15-minute. Start looking at this thing at about 1:30. See what is formed in the early morning before lunch, and people coming back from lunch. And that'll give us the best kind of short-term setups on this one to play FOMC. But right now, we're a little bit too far to be dropping down to a 15-minute to project something that's in 3 hours, 4 hours. All right, a bit too much. But again, 33.77 I think is a good one. The Dow. So the Dow we talked Monday, again, getting into this 28.94. As you can see, we kind of hit and bounced back down again, hit it again and drop. We're still stuck in that same area. I think clean levels on this one are going to be the most important with the Dow. Again, the Dow will receive some benefit, not as much as the other two. I think S&P and NQ stand a better chance of, getting a move from the FOMC meeting projections. But right now, I don't know. I mean, these are on the hourlies. Again, this is that area that we mentioned. Look, 1, 2, and we said, hey, listen, it's probably going to run through in the last time. We've hit it now. 3 and 4 are right in here. So it's not really a level that I would say is super important. And in the sake of keeping this clean, we'll pull it off. I mean, really up in here for FOMC. I mean, we're right in the middle, unfortunately, right? There were some buyers that stepped in, in this range, right? And that's where we saw this retest. I think either of these two levels is good, but we're smack in the middle right now. So, yeah. If we can get down to 27,781, I do think there's a great, there's probably a buy in there for FOMC. But again, we need some movement. Kind of the same thinking on this one is, yes, this is an hourly chart, and if we drop down to the lowers, I wouldn't even say here there's not great, nothing wonderful. Zone here, I mean, there's a small one here that's been tested, but I don't know. Do we really want to do we really want to push this down to a 15-minute chart for something as big as this meeting? I don't know. Like I said, I feel like the conservative thing to do and safe thing to do would be, again, look to see if we have any nice explosive levels, half hour beforehand, and that's where we go. So let's look at gold. So gold, we had a couple different positions in this one. As you guys can see, we're sitting right here right now. Yesterday morning, we were sitting right here. Okay, and again, that's where this short position came in. I think it was off a 4 hour. Yeah, it was the 4 hour level. It was here. This 1964. This level of basing right here, okay, is what we would have ran into. And you can see that's where we were hitting yesterday, this short. We had the other one here, and again, that was one we had talked about. Right now, I would say the top level is probably gone. This one definitely will have some, obviously, reactionary movement from FOMC. Question is, where are there good levels at this point? I think, to be conservative, I think we do need to look at here. And again, this is kind of a retest of this level, right? I think that's decent. Is it the ideal situation? No, the 2007, I think, is a better one. What's going to move gold today is going to be them talking about inflation, watching inflation, seeing inflation, healthy inflation. Anytime they mention inflation, this one will typically offer some type of a pop. If they're saying they are not seeing inflation, or they're not seeing inflation as much as they thought they would, those are all things that typically lead to more of a bearish kind of sentiment in gold. And again, that's probably what we're going to see. Again, it depends on what they say. It didn't stop. I'm like, why can't I move the mouse? She's pulling the cable again. Yeah, there's nothing. Unfortunately, there's just not a whole lot of clean left in this one. This is where we're sitting right here. You see this? Right there is what we're sitting on an hourly. Um, hmm. It's such a move down to 1925. I just don't know if we can get that far. Where are we at now? Let's see. Can it move $25 down? Is $35 down? Yeah, it could. I don't think it'll be enough power though. At this point, I'm kind of hoping that this rolls and flips and pushes up here. It's the positioning of this one is just crap for this meeting. 1990 is probably an area where we could look to get some type of a short off of it if we can rally up that high. But again, this one is basing sideways. I feel like the market doesn't know what to do with this one. Again, we're in a 30-minute short right now, but God, it's just not. It's not really. I mean, look at this. This is not trend, right? Even here, this is not trend. I mean, this was a little bit down, right? And then just sideways, and we've been really in the same level. It's kind of confused. It's lost. Ugh, I don't know. I want to say the way that this is looking, again, I think we're going to have some stabilization. There are some buyers below, and again, we may get a little bit of a pop beforehand. Way to play this one is going to be like the indices. Look at this one about 15 minutes, 30 minutes before the number. See if we've rallied into any of these zones, particularly on the 30-minute. And if we've rallied into one of those 30-minute areas, that's going to be where we can probably take it, that pre-release of data. So, yeah, just it's too early to be able to kind of forecast where this one's going to move right now. Too much time. There's too much trading time to go on this one. Silver. Silver, you can see that we came off of some of these upper levels. On the hourly, though, it's pretty choppy. It's pretty choppy at this point. A little bit more of a bounce, right? On the 4-hour, you can see that, again, basically just flat on the 4-hour. We've had some levels marked off at this 27.57. I believe that came from this time frame. Yeah, it was right here. It was this. Okay. See right there. That's where we had this one marked off. And there was your touch. And again, I think it was yesterday morning. Let's see. 10. Yeah, it was yesterday morning. Okay, that move. But we're in the same exact spot we were from 2 days ago. So nothing big. 27.57 is probably also a valid area. This one to me looks like it wants to go more short. Areas where we could, again, areas where this one could go wild for FOMC could also be down at this level right here at 26.82. That's the last time we've really seen great punching forward. Is it as clean as this? No, not really. But it's the closest term target that we have. I don't see silver dropping all the way down into the 26.10 range. Remember, we still have that Harry Potter trade, that collapse piece down here set up. If we get a break of this, I don't think we're going to get there today. But again, it is still on here as this potential short to the downside. If it drops this low, I think gold would be a better short. But again, it's something we got to keep on our radar. It's still there. It has not been triggered yet. And again, it's still in the wings. All right. So with that said, let's go across and grab oil. Let's grab our trading view, USO. Let me do the technical chart, full featured. I love it as full featured, but is it really full featured? Not really. All right, so good thing about oil is we finally broke out of that level, which is nice to see. Look, we hit, we had this basing level, we hit it. It hit it, basically front run again. You can see it hit it here and pulled back. I think we can see this on the 30-minute. Yeah, you guys can see it here and then pulled back again. So it punched through all those sellers. Again, not surprised on that one. So what do we do with this one now? Let's go back up to the hourly to kind of do this analysis. So we had this minor zone here. We'll delete that guy off. We kind of punched through. I mean, unfortunately, this one is there with the highs here. We're still kind of in that range right now. We'll remove these. And again, this is just retracing kind of the emotional here, right? This emotional response, we've retraced it. All right, so I'm going to adjust some of these a little bit. Let me see. I want to go back and figure out. Unfortunately, there's two of them in here. Let's do this, and we're going to pull this guy and pull this guy. We'll pull this guy, drop these two. No ads on my charts. No, thank you. Yep, I got it. Got it. There we go. Is that funny? Say yay, Jin Jin. I don't know if you guys can hear her. She's laughing. All right, so I'm liking where this one moves. Again, we got about 30 minutes before news kicks in. This is on an hourly basis, so I was looking for price to really drive into a level. Again, the last time we were off this area, we had a big push down, we had a base, a pullback, and then a nice drop down again. So there are definitely some sellers sitting in this 39.70 range to 40. Don't know if we're going to get a full miss on this one, though, today. Like I said, it is definitely a swap of what we've seen, right? Pulling this in for oil inventory report. You can see whoops, there it is. This 2.1 has been kind of a different look than what we've seen and what the forecasts have been. And again, last time there was this too. It's very rare that they make that big of a jump that quick. It's like, oh my God, wait, we got surplus. Oh yeah, And yeah, there probably will be some surplus again. Going back to, if you guys remember in the beginning when I talked about the unemployment numbers, how I actually expect them to be higher tomorrow because of people, with schooling and not working. But there are people that actually did go back to school, so I do think there are some buses running and stuff. So, I figure, I don't know. This number kind of surprised me that we had a +2 positive. It may come in as exactly as expected, but again, having a little bit more, seeing the number that they think is going to be positive, and again, you can see they never get it on. And the fact that last week they were off by 5 million, if they're off again here, and this is a big surplus, that's kind of setting oil up for more of a short than anything else. And that could look like something like this, right? You could have, here to here, right? No, we don't need 6 to 1. We need like 3. Right. Oh, God. Right in that level. And again, that's probably where some buyers have stepped in. Again, this basing here, the pullback and the test again. So, that's kind of how it's setting up. And again, this is on an hourly basis. Let me see if I can drop this down on a 15 and refine it any further. There's a little level right here, unfortunately. But yeah, that's probably the best way to do it. I don't know. Let me see. Let me drop down to 15 and see if I can. Unfortunately, that's how big the pullback was. Really, anywhere in here, I mean, I could probably take that and move that just a little bit farther up. And then it comes to, it's just not the greatest pullback. Let's see. In there, probably. Let's move this up. Something along those lines. Now it's a 4 to 1. Let's drop this to a 3 to 1 right here. That's a much better place. Much better target on that one. So again, if we can get up there in the next 20 minutes, it looks like it's setting up that way again for a positive number at bounce. It isn't the highest quality zone. I'd say this is probably like a B plus at the best. It is not a super clean break. It's it's a drop base drop. It's a big pullback. There's not really much wick in there. It's just it's basically a wickless top right in here. It looks like a wick here, but that's not the original piece. It's this other one here that we were kind of looking in, and that spike makes it kind of not as fun. But yeah, right now it looks like it's setting up for a short for today. FOMC will also affect this one because when they talk about demand going further, or going into the future and what recovery is going to look like, that will affect oil. The fact that we've had such a big pushback or push up is also kind of leading me to believe that oil will flip negative or something that they say is going to be negative for oil. Again, think about it. If you want to short something, you always want to make sure the price is a lot more expensive, right? You don't want to sell it when it's cheap. You want to sell it when it's expensive so you can buy it back at a cheaper price. That's kind of my thinking right now of what this looks like it wants to do. We are having quite a bit of movement in pre-market hours, so that's another thing that kind of leads me to believe that either the news has been pre-leaked, which again does occur, or 2, they're trying to jack the price up so they can get a better, more money for any type of shorts. All right. With that said, let's go across and let's go ahead and do the drawing for today. We got about 8 of you guys in. Make sure you guys do ! ticket to get us in. Ernest was the winner last time. Ernest is not even in here right now. Maybe he's sleeping or maybe he's in, but he's going to probably try to snipe this one at the last little minute here. So I'll give you guys until this says 1:13. That should be enough for everybody to catch up, to be able to get in. Neuro's like, yeah, I'm going to block Ernest. Debbie's like, I don't know. I'm going to pull the 1 hack trick and Marina's going to go in for the 1. Getting everybody else in. So, but yeah, Ernest won yesterday. So Ernest hasn't had a back-to-back for a while. Will's putting 2 in. No Debbie, no Debbie, no Debbie. That's what Ernest is saying right now. Yeah, Debbie is doing Ernest is doing the, no hacks, no hacks, no whammies, no whammies. Look at this. 10 seconds, and I don't see Ernest in here. Look at this. He's going to try to snipe it. All right, so let's see. I'm just looking at the close button. Let's see. 3, 2, 1, bam. Did he make it? Ooh. Ernest is sleeping. I said I was shutting it down at 113. Wow. Ouch. Look at that, man. I said I was shutting it down. Oh my God, he missed it by just just a few seconds. All right, so we'll see. It's totally up in the air today. We're who's going to win it. I'm going to put my money on, if I had to pick someone today, I'm going to go with, I think, man, you know what? These three guys right here have all actually won it, even being new people. So let's see. I think Bay Street Bull has won it as well before in the past. Man, I don't know. You know what? We haven't seen James in here. Maybe James will pull the hacks out and James will win it today. So here we go, guys. Winner of today's drawing is obviously not Ernest, but it is Marina. See, Ernest didn't stand a chance. Ernest saved himself 50 pip chips because Marina had the hacks in. She had the hacks in. We knew it was going to happen. You know, Ernest is learning. He knows it wasn't worth the 5 pip chips. He did it on purpose because he knew that the girls were going to not let him win. All right, there we go. Look at this, getting very, very heated at the top. It's getting close. See, Ernest would have been, if Ernest had to put that in there, he'd have been down to 800. She would have been within 100 points of grabbing that one. So close, right? So close. All right, guys, look at this one. Oil is still pushing up to that area. It's doing its best to get up there. So, all right, with that said, I'm out of here. I'm going to go refill my coffee. The girl is out of juice, and we are going to refill our drinks. I hope everybody has a good trading day. Like I said, be very, very cautious. FOMC is always something that you need to watch out for. Show caution with that one. And then, again, make sure you trade the response after FOMC. That's where they're typically the best opportunities. Wait for a spike. Wait for everybody else to be like, oh my God, it went up. I have to buy it because FOMC. And then you need to sell it, right? And then play the reversals today. And then again, I will see you guys tomorrow morning at 9 a.m. for our final day of the week. Thank you guys again, and I will catch you tomorrow.